I want to bring in a Key Advisor Group CEO, Eddie Ghabour. You know, Eddie, I think it was last month you were pounding the table on this notion that buy and hold may not always be the answer. Can you elaborate a little bit on that?
Absolutely, Charles. You know, coming into this year, there was no one more bullish than me, but I believe the market has been sending us a clear signal for the last couple of weeks that the economy cycle is getting ready to change. And that means what worked in 2021, in my opinion, won't work in 2022. So I cannot just buy and hold in this scenario heading into next year. I think you have to start rotating into sectors that are going to do well in a slowing economy. Because if you just buy and hold the same things you owned in a different economic regime, that's a recipe for disaster. So we've been extremely active for our clients. I'm going to continue to be very active as we get ourselves positioned to take advantage of next year.
But Eddie, so it doesn't sound like you're saying, hey, sell and move to the sidelines. You're saying rotate and reestablish a different sort of risk tolerance here.
Absolutely. So, for example, we took this big rip in small caps today and took a little bit off the table and added to mega cap tech that we think will hold up well in a slowing economy. So lowering the beta and high risk exposure during these big up days is what we're doing right now and positioning ourselves for defense for next year.
So we know the breadth has been awful. Individual stocks, a lot more of them been down than up in the last few weeks. How much tougher will it be to make money in the market, let's say next year, as it has been in the past 2 years?
So I think the environment is going to be extremely challenging next year. You have GDP that's going to be decelerating. We think we've hit peak economic activity probably the month of December. And you have a Fed that's in a lose-lose situation. They're going to be tapering and possibly accelerating tapering during a slowdown. That is not a good recipe for high beta equities. And so, again, I think you got to play defense, be patient. Even if you miss a month or two of up markets, I think the writing's on the wall with what's coming. And if you don't position yourself for it, you may hurt yourself in a big way.
All right, I got to give you props again. This time last month, we talked about the stay at home. That debate was hot and heavy. You said stay away from the, the Pelotons, the Zooms, the DocuSigns. I can't believe how much they've gotten crushed. So, I mean, people who listen to you saved a ton of money, but now, again, folks are sifting through the ashes wondering, well, what about now?
So here's where I think investors need to start positioning themselves now. I love mega cap stocks in regards to tech side. I like housing. Look, commodity prices coming down, interest rates staying low is really good for housing sector. And then low beta. There's some great low beta ETFs investors can get into. And then next year, we plan to add some utilities and gold. We don't have it now, but we're going to be adding those things that, again, we think will hold up well in a slow-growing environment that's going to be decelerating next year.
So I should point out that utilities coming into the day was the best-performing defensive sector. It's the #1 sector so far in this session as well. On the home building side, do you like individual home builders?
That as well as REITs. I think you can get some nice cash flow. And again, I think the setup for the real estate sector is very strong. The supply-demand dynamics are still extremely, extremely strong for this sector. So I think it holds up well next year, at least the first half.
All right, 10 seconds. Is the worst over? I mean, it does sound like obviously this market's going to bump along to what you're worried about. But is the worst over? Is this a swoon for 2021?
The worst is not over yet, Charles. We got 2 weeks here that I think can be pretty tough setup. We got the Fed on the 15th. If they even hint to accelerating tapering, we're going to see some extreme volatility, in my opinion.
All right, Grinch. I mean, Eddie. Hey, you've been spot on, my man. Thanks a lot. We appreciate it always.
Thank you, Charles.